every shining star is the sun. Not every shining star is the sun.
Navigating commercial real estate requires an analytical mindset,
Strategic foresight and adaptability, interest rates, liquidity challenges, tenant behaviors, and market dynamics all intertwine to shape investment outcomes. Whether you're acquiring, managing, or selling assets, understanding these forces is the key to making informed, profitable decisions. Like the invisible hand guiding the market, interest rates play a pivotal role in commercial real estate. Higher rates mean increased borrowing costs. Investors need to factor in higher debt servicing expenses, lower property valuations. As cap rates rise, asset values tend to decline. More cautious lending. Banks tighten financing, making it harder for buyers to secure deals. Commercial real estate is an illiquid asset class, meaning properties can't be easily bought or sold like stocks. The lack of liquidity can lead to longer transaction timelines. Deals take months to close, impacting cash flow. Market dislocations. In uncertain times, buyers vanish, leaving sellers with fewer options. No tenants, no cash flow. But today's leasing environment is riddled with challenges. Remote work shifts. Office demand fluctuates as businesses reassess space needs. Retail struggles. E-commerce continues to disrupt traditional brick-and-mortar spaces. The heartbeat of commercial real estate lies in market trends and valuation drivers. Location. Proximity to economic hubs, transit, and amenities drives demand. Welcome to Real Estate Edge Weekly, your trusted partner in maximizing the value of your property. Whether you need financial analysis, lease abstraction, marketing support, or asset management guidance, our team is here to help.